Well, with no further ado, I think it's over to Anthony, who's going to pop up. There he is. He's on the screen there. Anthony, the floor is yours. Take it away.
Yeah, thanks, Tom, and good afternoon to everybody. And first of all, just to say what a fantastic series Klaus and the DigiShares team put on through these webinars. I think the topic we're talking about today, institutional tokenization, is about tokenizing the world. And if we're going to do that, it's through no one institution being able to build critical mass, but it's by the industry collaborating. And I think you'll see this in many events and ones we're involved in with Ownera, taking the same approach. Okay, I think I've got 15 minutes. I've got a few slides, hopefully with not too many words on them. I'm just going to share that, and we will get off and running. So I'm sure the DigiShares team will tell me if we can't see that, but I'm hoping you can see my presentation. So Ownera as a company, we're now just over 3 years old, growing very fast. We announced our Series A last year. Our headline investor was JP Morgan, and we have other large institutions coming in as well. So we're very much focused on the institutional space around tokenization, and we focus purely as an organization on bringing the industry together to unlock distribution and liquidity for tokenized assets. We think this is one of the most important topics to really be the catalyst to enable this industry to take off and deliver on its promise. So just to dive in, our vision, we believe that all global asset and wealth management will become digital. That can mean many things, but fundamentally it's about being able to take assets and digitally distribute them to appropriate investors wherever they are in the world. So really be able to unlock that distribution and bring, I think as BlackRock was saying in an interview the other day, bring assets closer to their ultimate beneficial owners and drive efficiency in this industry. In doing that, there's these new digital battlegrounds across the industry that are emerging, and we would synthesize it down to really it's about who can bring the best assets online. Investors are looking for high quality institutional grade assets. That could be issuers themselves, but they could be institutions representing and advising those issuers. And on the other side, it's who can bring the best investors online to connect to those assets. There's a really an insatiable demand for amongst accredited and institutional investors for some of the primary initial targets of this industry, which is private market assets. Investors are looking for diversification. They're looking for a greater percentage of their portfolio held in these alternative assets, but we can't give them access historically. Those highest quality assets have really been the domain of, they tend to get distributed maybe to a small handful of pension funds, and then it's done, right? And there's no liquidity. So this new world enables us to take high quality assets, distribute them to the right investors around the world. And if we've got large scale distribution, we will start to get some liquidity, even though many of these assets are conventionally quite illiquid. So what's at stake? These are our launch markets. You'll find it's where a lot of people you're here talking today are focused on, led primarily by the private markets, which is a world that is offline and much bigger than the public markets, right? The public markets is noisy because it has all of the liquidity and the trading, but the size of the markets are much higher in private markets. So you could take the world of private company shares, 2.5 trillion, private equity funds, 9 trillion, institutional real estate. Well, 6 trillion is what's immediately addressable, but when you open that up to the broader commercial real estate industry globally, much, much bigger. All of these obviously are many times larger than the world of crypto that has driven and informed the technology that's starting to make all of this possible. And not only are these big markets, but they have the ability to unlock new applications, new market opportunities for new clients, especially if you can unlock digital distribution of these areas, you can start to really mobilize a functioning secondary market. And then something that we think will be incredibly powerful in the future is then for investors to be able to borrow against those private assets and other assets. And that starts to unlock the world of collateralization, collateralizing the world's assets, and that can be tremendously powerful. We're also interested in areas such as money market funds, which are high quality for collateral. Really, they're traditional finance's version of what crypto have developed, stable coins, right? Money market funds, stable, could potentially be used as a means of payment. And then in the world of securities lending, there's lots of opportunity if you can unlock this in areas such as the repo market. So what's the problem we're solving? Lots of great companies, large and small, have now understood the potential of what's going on here, this potential to tokenize real world assets. The problem is that up until now, it's been a complex environment, right? The technology's complex. There are many different technology solutions, different people using different blockchains, distributed ledger technologies, other distributed computing technologies to tokenize assets, and they've had trouble talking to one another, right? Interoperability has been a major issue. Furthermore, securities themselves are not simple. We say crypto is simple, right? If you're dealing with crypto virtual assets, which are almost like bearer instruments, like you can think of like Bitcoin is almost like a bearer bond, where you transfer the private key and you've got the Bitcoin and job done. In the world of securities, it's complex. You have issuers, you have regulatory responsibilities, distributors, fiduciary responsibilities, you have the life cycle of the security to manage, etc. And so you never get all of that on chain, as we would say, together. There's a lot of other data regulation requirements around them. So that makes it complex from a regulatory and ecosystem point of view. And so the result is that you have these emerging tokenization venues starting to get some traction, starting to have assets that they're tokenizing, presenting to investors, but nobody's got any real scale, right? So it's not like the public markets where you've got all the liquidity you want in the context of one exchange. Here we're talking about, if we're going to get any sort of scale, you may have a piece of real estate sitting in Germany. What are the chances that an investor on your own venue wants that real estate? Actually, it's much greater if you can unlock global distribution and liquidity and start to provide access to those assets to investors all over the world. Once you can do that, once you can start to connect these pools of liquidity, connect investors, that global distribution is then the route to liquidity for this industry. And that's the problem. At the moment, there hasn't been global distribution or liquidity in that space. That's what we're very much solely focused on unlocking. How do we do that? If you're going to do that, you have to bring the industry together, right? And you have to take a very open approach in the way I referred to at the start with this same approach as this webinar, right? We need to bring everybody together to collaborate, to have these distribution rails that is going to unlock this industry and enable a new type of finance and everybody in this space to be successful. So we've worked very closely with a fantastic not-for-profit industry group called GDF. If you don't know them, they merged last year with the Global Blockchain Business Council, which is a bit more US-centric, and together they now represent a really powerful voice representing digital finance globally, and spend a lot of time with central banks, regulators, etc., educating, informing and supporting the development of this industry. And over the last 2.5 years, this group that I have the privilege of co-chairing has grown very rapidly. And what we're doing with that group is these distribution rails we're developing, the protocols to make that work, we've developed with the group as open source. And so it's something that everybody can engage in unlocking this distribution. And this open source protocol that the group has been evolving is called FinP2P. It is a peer-to-peer network between financial institutions. So what we're doing is taking assets wherever they are tokenized, digitized, taking the institutions that are representing those assets, connecting them to these peer-to-peer rails. And on the other side, you can have institutions bringing pools of investors, can have exchanges that have both, and everybody can play their part and deliver the services that they deliver under the appropriate regulatory licenses to unlock this industry. So as Ownera, as a commercial organization, we focus on building and delivering commercial implementations of nodes on this network. And so what happens is you have institutions bringing assets from their tokenization platforms to distribute those at source, and they basically stream those on a peer-to-peer basis to other institutions across these rails. We aggregate and normalize the data around those assets from various sources, so that on the other side, where you have the pools of investors, you might have wealth managers, private banks, hedge funds, wherever it might be, they can have a unified API to access all of these assets that are being tokenized and distributed from diverse environments all over the world. There's a short video here. I'll take the risk on a webinar of playing it. It's only just over a minute long. I hope you can hear it okay, but this is a summary of explaining what we do, and it synthesizes some of the things I've just said.
Imagine giving your clients instant access to trade any private asset, from real estate to private shares, from funds to bonds. You got it! Private markets are 100 times bigger and more complex than crypto. On the supply side, there are dozens of tokenized asset sources, implementing different blockchains, metadata, and flows to solve different use cases and regulations. On the distribution side, there are banks, exchanges, and broker-dealers all over the world. How do we connect them all? The financial industry came together to design FinP2P, an open-source routing and settlement protocol, which Ownera is deploying. Asset sources plug in and simply publish their assets. Ownera aggregates and normalizes the flows and data, giving financial institutions a single API for all digital securities. The result? Assets get global digital distribution and liquidity. Investors get online access to investments, secondary liquidity, and loans against any private digital security. Come on board Ownera, where we take away the enormous complexity of trading private securities from across the industry by giving your clients a unified digital securities wallet.
There you go. So that is about bringing the industry together, taking this very open approach. So if you think about, I've just got a minute or two to wrap up, but if you think about this whole process of tokenization, and I have to say, Ownera, we don't tokenize assets, right? Because we're just focused on those rails. So we collaborate with many companies that are doing tokenization, whether that's large institutions or fintechs that are tokenizing either as tech providers or with licenses to manage issuances themselves. And these companies are now there with various venues. They're selecting high quality assets, step one in this life cycle. They're going through the complexity of everything it takes to tokenize a real world asset, effectively as a regulated security. What are the legal structures, the regulatory profile, who can it be distributed to, in which jurisdictions, and then they tokenize those assets. And so we see these assets now being tokenized in these various projects, venues, etc. At that point, that's where distribution becomes all the more important. So even where a particular venue or exchange may have, a few hundred assets and a few thousand investors, really to unlock this market, you need much greater distribution. So it enables these tokenization venues to run a FinP2P node and then start publishing assets to other institutions who have investors. So that really unlocks that missing link in the chain, if you like. Once those assets have been published, then suitable, appropriate investors can discover, research those assets, get all of the information. We're working with some interesting companies that are working on timely valuation data for these type of illiquid assets. You can research them. And then once you've done that, investors can invest in them. The asset managers can manage the life cycle of the asset. You can start to unlock liquidity, and then you can see new markets emerging, such as the ability for institutions in this ecosystem to lend against those assets. So somebody might say, well, I've invested in this large, bit of prime real estate in central London. I don't want to sell it because it will trigger a tax event. Maybe I can borrow against it. This sort of new ecosystem would enable maybe half a dozen institutions to immediately and digitally quote to lend against that sort of asset. And then you start to unlock collateralization. Okay, I think I'll wrap up in a minute so we can keep the webinar on schedule. I might skip over one or two of these things, but again, we're really unlocking, first of all, primary markets and primary distribution, enabling investors to discover the right assets wherever they are in the world. Once we've done that, investors should be able to buy and sell those assets in this peer-to-peer network that's supported through an indication of interest, buy and sell intents. And then we can see exchanges hang off these rails as well to start to develop depth and liquidity and market makers, etc. And then ultimately this whole new market of lending. Ultimately, that brings distribution on the asset side, improves transparency, risk management. There's lots of benefits around balance sheet management, optimizing capital, etc. And on the investor side, wealth managers, private banks, etc., have got a way that they can deliver these alternative assets to their clients in a digital way, still manage and develop the relationship with those clients. They're not surrendering them into some other private market exchange. It's an environment where wealth managers can give access to those assets, sitting on venues all over the world. And with that, we can hopefully unlock this industry. Those who want to know more, I'm quite visible on LinkedIn, or you can reach out to me, and we'll be happy to talk further about everything we're doing working across the industry. Okay, I think I will hand back to Tom.
Brilliant. Thanks, Anthony. Thanks for getting us off to a roaring start there. One question which just come in actually from Derek Smith says, does Ownera and P2P Fin provide ESG reporting metadata?
Oh, really interesting. Yeah, no, ESG is a really interesting space for this whole industry. What I would stress is, yes, Fin P2P is the rails, so it supports the transmission of accurate, timely data around assets. That data is coming from sources where they're tokenized. And so, yes, it unlocks not just, just more generally the ability to look at a piece of real estate and get valuation data and rental income and all of this stuff. But when you're in the ESG space, look at the credentials of the asset, what's underlying that, what makes that up, what are the ESG ratings, etc. So it helps both in that sense, and also there's interesting potential down the road with things like the carbon trading markets and being able to provide more transparency and connect pools of liquidity there. So in the whole broader ESG space, there's a lot this industry can add value, I think, in the coming years.
Great, and I guess a short question from me as well. You're quite a familiar face to me in terms of events and webinars in this space over the last, say, 12 to 18 months. I guess kind of like where have we got to, and where do you think we'll be in 12 months' time? Is really things starting to ramp up now? Because that's certainly the feeling and noise I'm getting.
It's been really interesting, actually, 22 into 23. I think, 22 on the crypto side was dominated by the crypto winter and everything that's happening, FTX going down, all of this stuff. And in many ways, what that's done is it's focused a lot of institutional minds on what's really important with this technology. And it's really about real assets, I would say, not virtual ones. And what we've seen in 2022 is now a number of venues really coming to the fore who now are tokenizing and issuing tokenized assets to investors they've onboarded onto their own platforms. We've got a lot of institutions now coming inbound to us who are refocusing their efforts on applying this to regulated securities, tokenization of real world assets. And it's really the missing piece is this distribution. So what we've been doing the last year and a half is putting a lot of focus on getting to a point where we can get enough high quality assets from institutional issuers connected to the right pools of institutional investors, accredited and institutional investors, so that as we go live, we have the momentum to turn that wheel to grow the network and then bring on other assets and investors node by node. So this is all coming together for us in the next quarter, where we start, the first nodes are going live, distributing. I mentioned Prime London Real Estate, but that's a good example. Things like Prime London Real Estate distributed to wealth divisions of some major institutions. And then once that's up and running later this year, we'll be adding nodes and adding pools of assets and investors. So we think that everything that's happened the last year has focused people's minds again on what's important about this technology, which is tokenization of real world assets. And now we're in a really good position and timing to unlock that for the industry globally.
Brilliant. Well, look, thanks very much, Anthony. Thanks for your insight.